Welcome to Business Zone. I am Yemisi Landre Idowu. The stock markets across Africa closed to mixed on Friday as investors struggled to keep mobile profiles for the Yuletide. We'll start analysis from the Johannesburg Stock Exchange in South Africa. The exchange closed in red with the index dipping by more than 2%. Index showed huge losses on equities across market sectors, and profit taking was key as investors moved to hold cash for the season. In Nairobi, Kenya, the stock market closed weak on the back of huge funds being withdrawn from the securities market as investors face seasonal financial pressures. Banking stocks took the hit on major fronts. The market in Ghana also closed in the positive territory, and the successful conclusion of the country's election now spurred many people to run to the stock market to stabilize investment. The index fast-forwarded by nearly 5%. And finally, the Nigerian market closed in green. The market cap was boosted and it rose above 26,000 points. The local market has been in weak trade for a long time now as recession hit hard on the economy. All right, let's take you further into the Nigerian market now. The banking sector had the highest trade volume, closing the day with 83.30%, while insurance carriers, brokers and services are among the top 5 sectors by volume, accounting for 62.24 million of total volume traded. Now, Dangote Cement PLC led the pack of gainers with 3.02% and closed at 170 naira, while Ecobank, Transnational Corporated PLC and Cement Corp of Nigeria PLC followed by 7.8% and 4.95% respectively. Unilever PLC top losers chart with a loss of negative 9.74% and a close of 39 naira 57 kobo, while Mobile Nigeria PLC followed with a decline of a negative 1.43% and closed the day at 280 naira. All right, let's see. Union Bank of Nigeria PLC was the most active on the chart of top 5 movers, as we have it here, with a 611.96 million contribution in volume. And the last on the chart is Fidelity Bank PLC with a contribution of 20.35 million volume traded. All right, UCAP reached a new 52-week high point. As we have it on our chart here, in the oil sector, crude, we saw the oil Brent price was traded today at 4.26% decline to close at $54.02 per barrel. Now, the Union Bank of Nigeria PLC emerged as highest dividend yield equity, with Fidelity Bank PLC and Oando PLC also making the list. All right, that's the trading for today. But for a wrap of the week, the equities market resumed the week on a positive note as the all-share index moved northwards at the close of trading on Monday, settling the year-to-date return to negative 8.98%. We have Honeywell Flour Mill PLC leading the pack of advancers with a gain of 13.56%. at a close of 1 naira 26 kobo, followed by Ecobank Transnational PLC, which settled at 10.18% at a close of 11 naira 5 kobo by the close of trading on Thursday. But uptrend in the oil and gas sector continued this week as Forte Oil PLC maintained a consistent winning streak from its positive market performance last week to settle at 9.96% at a close of 128 naira 78 kobo yesterday, which was Thursday. Now, on the flip side, Mobile Oil Nigeria PLC topped the decliners log for the week with a loss of 5% at a close of 284 naira, while Total Oil Nigeria PLC followed closely with a decline of 4.4% and closed the day at 277 naira 13 kobo by the close of trading yesterday. Now, sector performance as measured by the NSE indices shows that the banking index and the pension index advanced at the close of trade the same day, while the NSE oil and gas index, NSE consumer goods and NSE industrial recorded a decline of 0.18% and 0.28% respectively. Now, the financial sector accounted for 1.59 billion of total volume traded at 931.28 million by value and was quickly followed by the oil and gas sector. Although it performed better than the banking sector, but it accounted for 8.71 million of total volume and 538.39 million worth of value traded respectively. Let's take you to the crude market now. Brent crude was traded at the beginning of the week at $55 per barrel and ended the week trading at $53 per barrel in the international commodity market. But for the OPEC basket crude oil, it traded there at the beginning of the week at $50.49 per barrel and ended the week at $52.39 a barrel in the international market. Okay, looking at the heat map on the international sector, we see the dollar rising against major African currencies, but it remains unchanged against the Nigerian currency. All right, now that is a review of the stock market on the at the Nigerian bourse there. We'll take a break now, and when we come back, we'll have the Managing Director, Stanbic Securities, talking with us more about banking stocks at the Nigerian market. So stay with us. Just before we bring on the IBTC, the Managing Director, Stanbic IBTC stockbrokers, let's take some news now. Following the introduction of the new bond notes by Zimbabwe, many traders in Harare are accepting them in exchange for goods, where some traders have acknowledged that they are now able to sell their wares more easily. Zimbabwe's central bank started circulating $10 million worth of new bond notes last month in efforts to curb a serious cash crunch, although withdrawals are limited to curb any abuses. Upon announcement of the release of the bond notes, many Zimbabweans tried to empty their accounts of hard currency, with some linking the move to secrecy of the Reserve Bank of Zimbabwe around the release, as well as its failure to publish security features. Well, Zimbabwe is $1.6 billion in arrears to the World Bank and African Development Bank. The huge debt prevents Zimbabwe from securing any extra financing from the two institutions or the International Monetary Fund. And the Zimbabwe Tobacco Industry and Marketing Board has licensed 3 auction floors and 19 contract buyers for 2017 trade season. TIMB Communications Manager Ishinesu Moyo confirmed the development. He says that farmers with early crops had started reaping the benefits and carrying in preparations for the marketing season. Now, the Reserve Bank of Zimbabwe recently encouraged stakeholders in the tobacco industry to consider opening auction floors early to ease cash shortages. Our United Kingdom's largest grocery and fashion store, Teso, has opened its first African fashion subsidiary in Nairobi, Kenya. Reports say that a local franchise holder, Dickens, is gearing up to open a second store in January, and 5 stores are outlined for opening over 5 years. Some other stores will be in Rwanda and Uganda. Now, the company has presence across Europe, Asia, and America. Now, inflation rate in Rwanda eased to 6.4% year-on-year in November from 7.4% recorded the previous month. The data came from the National Institute of Statistics of Rwanda. Now, the report shows that foodstuff prices, which rose by 18%, were the main drivers of inflation. Beverages followed by 13.5%. Transport, house and water, electricity and gas were inflation component of about 2.6%. All right, let's get back to our focus of the day, talking about the Nigerian stock market, of course, the African market in general. And I'm now joined by the Managing Director, Stanbic IBTC Stockbrokers Limited, Titi Ogunbesan. So many thanks for your time, Titi, for joining me on Business Zone. All right, now, Glad to have you. Now let's look at banking securities activities on the African stock market generally. Well, with a focus on the Nigerian market, from what we have or from what we gave earlier on our review of the stock market, we know that generally banking stocks dominate activities at the stock market. But for what we had so far, especially at the close of trading, we see the crude oil, the oil sector gaining momentum higher than the banking stocks. What do you think could be responsible for this?
Yeah, so generally the Nigerian Stock Exchange All-Share Index has declined about 6.75% year to date, and month to date about 5.75%. And this month, particularly December, he has gained about 5.81%. And the rally in the month of December has been attributable to the oil sector stock. The oil index has actually rallied, and year to date is a loss of 6.5% thereabout, but it has rallied in the last 2 weeks. Looking at the end of November till now, we see about a 28% increase in the oil stock, and this is actually coming on the back of increase that we've seen in the oil prices. So we've seen that following the decision of OPEC to reduce the oil production to about 600,000 barrels daily, we saw that oil prices have moved from the levels they were trading to current 54.55 levels, which is about 16 months high in terms of performance of the oil, the crude oil. So we see that from that, most of the oil stocks have actually appreciated in the last few weeks here to now. For instance, if we look at Mobil has gained about 66%, in the last 2 weeks, and it's actually attributable for Mobil specifically to the announcement that we saw in the price that NIPCO bought ExxonMobil's stake, 60% stake in Mobil Nigeria. So from that announcement, when it got to the market, that it was priced at over 400 naira per unit. So we then started seeing speculative activities from the 190 levels to the current. It traded as high as 324, which is about 5-year high in Mobil. We've also seen Total and F4 as well in the oil sector that has really rallied in the last few weeks. And for Total, basically, it's based on the fundamentals, and it's a quality name. And also, if you look at their recent results, also they had a 12 naira dividend for the full year and the 3 naira interim that was proposed. So those were actually the positive that went for Total. Also F4, we've seen F4 also rally from 53 naira levels to the current 128 naira level. It's gained about 140% in the last couple of weeks, and we're still seeing interest in the name. Though we've started seeing profit taking, there's some local investors that have speculated in the names have also been taking profit and been going out, but we're still seeing good interest in the oil sector.
Well, that's a positive one for the oil sector, and of course investment in the oil sector. I know many banks at some point had dealings when there was the oil boom, but looking at this time before the OPEC cut, really before that decision, we know that it became a sort of a bad loan for many banking companies that had dealings in the oil sector. But with this OPEC cut, do you think the banking system or the banking sector would actually go back into such deals?
Yeah, so for the banking sector, the reality is at this point in time, many guys are very cautious on NPLs. And I mean, so in going into loans and transactions with the oil sector, you have to do your credit analysis and you have to look at it from a risk perspective as well. But it doesn't mean that there won't be lendings to that sector, but I mean, it would be with additional consciousness so that NPLs are sort of under control. Sure. And if you look at the banking sector, Nigerian banking sector, for instance, we've seen the tier 1 names go appreciate about on the average, simple average of about 24% this year to date. I mean, compared to what we've seen in the tier 2 names have sort of lost value about 50%, this year, and it's actually because most of the people are actually after quality. From what we've had recently, especially the macroeconomic challenges that we've had relating to the oil prices and the currency that we're going through at the moment, we see most investors have preference for quality names. So it's more of a flight to safety, and the preference for investors generally now is, I want what is quality so that, I can sleep with my eyes closed as much as possible.
All right, let's look at the level of inflation. We have it at more than 18% now. Do you think it's going to encourage any form of investment in banking stocks?
Yeah, so if you look at the inflation, I mean, the numbers for November came out as 18.48% percent, which was about 15 basis points above where it came out for October. It's actually coming up at a reduced rate. If you look at the September numbers compared to October, it was about 3 basis point increase. So we see that inflation is sort of increasing at a declining rate. So we don't expect a further surge. We expect that as we go on, it will reduce gradually, and on a base year impact, we expect that inflation will be low going forward. So we don't expect that this will go far above where it is at the moment.
Okay, that takes me back to the issue of loans. Now, the loans from banks are believed to be slowing down in many areas. What is happening? Is it that banks are afraid to venture into risky or viable businesses?
Yeah, so you're going to grant loans, I mean, profitable businesses, but you also have to look at the risk side. So for many banks, I'm sure the credit unit and the risk is actually very key at the moment. So in going into any loan, you have to analyze and see the credits, and also it has to be return which is justified by the risk. So it's not just taking risk which is not justified by the return that you expect to compensate for it. So that's what's happening.
All right, I know the federal government is talking about giving single-digit interest rate to some to some borrowers now in the area of there was this particular kind of borrowing that the federal government was talking about, but that seems difficult for many banks to adhere to. What can you say?
Yeah, you know, in promoting businesses and, you know, growing the economy generally, we need the small and medium enterprises to come up, and we need to focus on them. You know, so it's actually possible. It depends on the regulations around it. So, I mean, at some point we saw that CRR, you know, CRR was used to cater for whatever lending. So if you're a bank and you're going to give you're going to advance credits to this organization, you've got a provision where, you know, you can access CRR, cash reserve for that. Yeah. Okay. So I mean, so in promoting it, the government can actually bring regulations that favors that. Okay, regulations that favor that.
The federal government wants agriculture to be the mainstay of the economy come 2017. What's Stanbic IBTC doing in that direction? Is there any form of cooperation in that area?
Yes, so the reality is where we are now, and the fact that we're an import-dependent country, it's real and it's clear that we need to look inward and see how we can develop, you know, on our own. And agriculture is actually a major point that we need to look at to develop the economy locally. So we need to look inward, and it has to be everybody. Stanbic IBTC, all other banks, everybody has to come to the table and ensure that what we can do locally, we can promote it so that we can reduce our dependence on importation.
Lastly, let me ask you, how strong is the banking system in Nigeria as we speak?
Yeah, so the reality is, okay, we've got asset quality issues and all, but at some points, you know, we know that there were many banks that were looking at raising capital, you know, to buffer what the capital level was. But because of the situation of the market, you know, it was difficult to, and because of the investor sentiment. But we believe that once there's an improvement in the sentiment from investors and all, we'll see many more organizations launch out to raise capital and to show up where the capital levels are.
Okay, finally, just before I let you go, Titi, the president presented the 2017 budget. That was on Wednesday, and it says it's a budget of recovery. Do you think it's actually going to steer the economy out of recession, in your view?
In my view, yeah, I mean, so there are a lot of questions around the expenditure, the revenues and all, but I mean, we all have to just work towards it and ensure that, you know, it's achievable. We all just have to put our minds to it and see how, you know, we can work together to get this. And good thing is oil prices have really moved up. Oil prices are 54.55 now, so it's actually in the right direction. So with that, and with the fact that OPEC has agreed to cut production, it's actually positive all the way.
All right, and actually so positive all the way. Titi Ogunbesan, Managing Director, Stanbic IBTC Stockbrokers. Many thanks for your time on Business Zone. We appreciate it.
Thank you.
Thank you. Well, crude oil prices have stayed in the lower territories for the third consecutive day as dealers show reluctance to pay higher premium for key energy products. At the London market, the Brent trades downward at $53 a barrel. Now the price value drops by 8 cents. For the OPEC basket, Brent price dropped to $50 per barrel. OPEC cartel added in November agreed to cut output to boost price, but the dealers have remained unchanged at the higher rates. All right, that's Business Zone for today. Many thanks for watching. I am Yemisi Landre Ido. Up next is TVC News Hour Nigeria at the top of the hour.